Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this afternoon, we have Ryan McCormack, QQQ Equity ETF Strategist at Invesco, to discuss weekly trends in the Nasdaq-100. And Ryan, what a week it was, with the index dipping 10% into a correction, then immediately into recovery.
Yeah, a week that we haven't seen in quite some time, arguably probably months. Yeah, it dipped below 10%. I mean, it kind of hit that 50-day moving average on the index, bounced from there. But yeah, S&P 500 outperforming, pretty substantially, as we kind of saw a slight rotation out of those winners that we've been talking about now for weeks on end, into some of the more unloved names. But generally not many places to hide last week as equities were red across the board.
Let's take a look at our second chart here, where we see where the sector out and underperformance was, for a little bit more look into that.
Yep, and it's exactly that. It's become the story of QQQ's three largest sectors. Their largest overweights, kind of lives and dies by it. But in this case, infotech, consumer discretionary, and communication services, all pretty handily in the red. Beyond that, the holdings within QQQ down more than in their counterparts in the S&P 500. And that's not really all that surprising, right? Consumer discretionary is one that certainly jumps off the page. And we've been talking discretionary, pretty handily over the past few weeks as just a spectacular performer. But in this case, down nearly 12.4% on the week, relative to the S&P, down 5.7. I think you look at Tesla down over 30%. You have Amazon.com. Again, you're seeing sort of this panic last week of let's get out of these winners and start to rotate. And certainly names that have run the most were among the hardest hit.
Yeah, of course. And I mean, it kind of makes sense too, although there was nothing that fundamentally changed when we saw the beginning of the sell-off. It's just, how could you not take profits in some of these names? They've had such an incredible run since the March 23rd low.
Yeah, I mean, essentially a reset, right? I mean, there wasn't anything glaring from an economic standpoint. There wasn't anything glaring from a company-specific standpoint. So, it wasn't like there was some big alarm bell being sounded, almost like a reset of the market where, we kind of took a pause heading into Labor Day. And as you look at price action today, QQQ is kind of bounced off the horse, right? And you almost see it coming full circle where Tesla is up over 8%, right? I mean, you're looking at shares that are on sale at levels that you probably haven't been able to buy in weeks or months. So you're seeing that full circle rotation where some of these tech names are now back in vogue for today.
All right, Ryan, great stuff. Thanks for joining us on Trade Talks.
Thanks, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.